RRSP deadline fast approaching, as I mentioned earlier in the show, March 2nd, not March 1st, because March 1st is a Sunday this year, March 2nd, first 60 days. That is when all investors, or that's the date that all investors have to contribute by if you want a tax deduction for your 2025 income tax year. Let's put up our one chart for this segment to show you what the numbers look like. So how to calculate what you can put into your RRSP if you've maxed out your RRSP in previous years. 18% of 2024 income will give you your 2025 limit. And if you're contributing to your RRSP, and you can do that right now as well for your 2026 income, if you know what that's going to be, then it's 18% of your 2025 income year. There are obviously maximums that the government puts. For 2025, $32,490 is the maximum if you're fortunate enough to be able to put the max. And this year, for 2026, the maximum will be $33,810. And if you're wondering how it's figured out or calculated, how much it goes up, it's obviously based on the inflation rate or inflation. If inflation got up quite a bit, you would see these numbers move significantly higher. Tax-free savings accounts, something I believe everybody should have. If you don't have a tax-free savings account today, call me. Let's get a tax-free savings account open for you. It is a way that you can invest and not pay any taxes on the gains. Yes, it is true. You do not get a tax deduction for your contribution, but you get to put away money and allow it to grow tax-free for really as long as you want until you take out the money. We know in the last couple of years, the maximum that you could put in any given year went up by $7,000 last year, this year, for example. So now the cumulative limit for TFSA contribution per person, if you were 18 years of age as of 2009, is $109,000. So if you have a spouse, you and your spouse can put in up to $218,000 and grow that money tax-free. A very powerful account. I always say to people, what's the difference between RRSP and TFSA? You need a tax deduction, you got to go with the RRSP. If you don't need a tax deduction but want to invest, then maybe the RRSP doesn't make sense, because when you pull money out of the RRSP down the road, you're going to have to pay income tax. Whereas TFSA, you can grow your money tax-free, and when you pull it out, you pay no tax. Any capital gains or dividends or interest or anything while in a tax-free savings account, you pay no tax. So a great way to invest for your future. And that is the difference between the two. But keep in mind, March 2nd this year is the deadline for first 60-day contributions to your RRSP.